Hello, and welcome to the Mobile User Acquisition Show, a podcast to help you unlock tremendous growth for your app. My name is Shamant Rao. I'm the CEO of the boutique growth marketing firm Rocket Ship HQ and host of the podcast Mobile User Acquisition Show. In each episode, we feature experts in the field of mobile growth and discuss strategies, tips, and pointers from the leading edge of mobile growth marketing. By the end of each episode, you will have gained actionable and tactical insights that will help you make more informed decisions in your own work around growth. The Mobile User Acquisition Show is produced by Meryl Vincent, Content Marketing Manager at Rocket Ship HQ.
Our guest today is Wilson Kriegel, co-founder and COO at BuildStock. And today's episode is rebroadcast from our older podcast, How Things Grow. In today's episode, Wilson tells us the story of a perfect storm that he was in the midst of about a decade ago, which in many ways shaped and pioneered the way we think about breakout growth and virality today on mobile. In today's episode, we will look at some of the earlier days of gaming portals, the days of the first Facebook apps when mobile first burst on the scene. We will dive into the stories of one of the earliest breakout hits on mobile, Draw Something, the Pictionary game. Wilson was a huge part of Draw Something, which was launched when its parent company, OMG Pop, was less than a quarter away from running out of money. They had just let go of people and were mentally gearing up to close shop when the game Draw Something came out. This game not just tracked the team back from the brink, but also drove some astronomical numbers and incredible viral growth that changed their fortunes literally overnight. Draw Something hit 1 million downloads in 10 days after its launch and 50 million downloads in the first 15 days after its launch. Less than a month after its launch, OMG Pop was acquired for $210 million by Zynga. In today's interview, we will talk about the early days of online games and mobile games and the Wild West it all was. We will go behind the scenes of the abrupt and completely unexpected ascent of Draw Something and the flurry of activity and deal making that culminated to its acquisition, a lot of which happened within a 5-day period. And the acquisition itself culminated less than a month after its launch. We go into incredible detail about what it was like to live inside a perfect viral storm that Draw Something found itself in the midst of back in 2012. This is an incredibly exciting episode that I'm very stoked to bring to you today, back from our archives in How Things Grow.
I'm very excited to welcome Wilson Kriegel to How Things Grow. Wilson, welcome to the show.
Thanks for having me.
Absolutely. I would love to start with cupcakes and puppies. What better way to start a growth-related podcast than with cupcakes?
Sure.
Tell me about Cupcake Corner.
Well, the history a bit behind Cupcake Corner ultimately was that Charles Foreman, the founder of OMG Pop, had a very strong affinity to anime and Asia cultures. He had spent time there, and when he decided to launch OMG Pop, which originally was a matchmaking real-time dating platform, which then pivoted several years later into a gaming, casual real-time gaming platform, he hired very talented graphic designers, flash designers, to really, he wanted to build the Mario games of real-time matchmaking casual gaming. And so there was a very strong slant of Japanese and Asian design and behavior around graphics and design of our Flash games. And so Cupcake Corner, Cupcake and Puppies, those types of products really stem from our original founders' DNA. So we built games in a way that would align themselves with a certain demographic, a certain culture demographic, and a certain behavior around gameplay. We thought Cupcake and games like Cupcakes and Puppies would align with that, especially in a casual environment.
I associated cupcakes with American Western culture, and then I didn't quite know there was such a strong affinity to Asian culture. So cool to hear that that was the case. To take a step back, Cupcake Corner was OMG Pop's first Facebook game. Let's also set the stage. Tell me more about how you found your way to OMG Pop. What appealed to you about them? What was the business like at the time?
Sure. So I had founded and co-founded or been hired at 4 other gaming companies before I joined Dan Porter and Charles Foreman as an executive at OMG Pop. So between 2002 and all the way to 2010, I had participated in building several gaming companies, from media-centric business around esports and real-time gameplay in venues, so all the way back from the days of Major League Gaming, which launched in 2003. So when I was introduced to Dan Porter in 2010, Robin Chan, a prolific angel investor, a friend of mine from my New York days, said, hey, Dan joined OMG Pop 6 months ago. He was a VC guy, a media music guy. He's joined the founder. So when I met Dan, that was really kind of the foundation and the root of it, which is Dan had just joined 6 months prior. He had just closed the original Series A with Spark Capital, and they were looking for some more expertise and a DNA around virtual currency and premium games, which I had extensive experience in. The company at that time was pretty small. I remember our first office on Bleecker Street in Soho was literally 10 people, I think. Dan, Charles, and basically what were 7, 8 Flash graphic designers, and back-end guys. So it was a small team. They had already built probably about 20 games at that time, Flash browser web games. The way we ended up jumping directly back into Cupcakes and Puppies and Facebook early on, as we were one of the first to really join that platform, the story goes, Zuckerberg's wife was an avid player of Draw Something, our original browser version of the game, which was only on the web at that time, and a few of those games that we had on our website. And when Zuckerberg in 2010 wanted to figure out how to increase the network effect and increase time spent, he thought that real-time matching would be a real opportunity for Facebook. And he viewed the game as an opportunity to achieve that. And we were early in the real-time matchmaking environment on the game side of people playing against each other. We weren't a farming company in terms of game mechanics. We were really about people playing with each other. And so there's an affinity there, both being introduced, I think, through Ron Conway, through Zuckerberg's wife to Zuckerberg and the gaming platform team. And they viewed our games as a potential kind of hook for people to spend more time on the platform through gaming. We saw Facebook's effort to support us in these game types to be tremendous. And so at least a handful of our developers end up really just entirely supporting Facebook and pivoting some of these games that we already had to Facebook platform.
Yeah, I definitely know from the time that Facebook was very, very actively supporting developers such as you guys. I think it's so cool that they saw the kind of matchmaking you guys were providing as an enabler of the Facebook platform itself and the virality on the platform itself. And just to clarify, this was the predecessor of Draw Something on mobile. Is that right?
Yeah, that's correct. To be clear, there were 3 versions of Draw Something before. There's 2 versions of Draw Something before we ultimately had the monster hit, the mobile version of Draw Something, which was a slightly different iteration of the product. We'll get to that, but it wasn't the original. The original was browser and then Facebook and then ultimately.
So the earlier version of Draw Something inspired you guys to build for Facebook. That led to Cupcake Corner, which was your first Facebook game. And from Cupcakes, you guys went to Puppies, which sounds like it was another huge transition for you guys because that was your first game on mobile. So what about mobile suggested that was the next platform for you that you guys would want to build on? Because you had caught the Facebook wave, you'd seen traction there. So what about mobile appealed to you guys?
Well, I would say this. Facebook to mobile happened pretty fast. Unlike, Pogo.com, which was around for a decade on web, between 2010 and 2012, it went from Facebook to mobile really quickly. We had to continuously find ways creatively through the game genres that we were in to create games that people would want to play on the platforms that would be potentially viral on those platforms. And we viewed that as our cost-efficient way of attacking organic growth and social networking growth. So we actually used our engineers, if you will, as a mechanism, and our designers as a hacking mechanism to kind of grow our company versus purely relying on game mechanics to then arbitrage a game to then generate revenues. With that being said, we were just gradually entering into a bit of the data phase, and Facebook was making more data available. And so we were also cognizant that, we had very low ARPU, very much of an advertising model, and that required a lot of scale. So we needed to continue to find ways to grow our user base, and that the mechanics around virtual currency for real-time matchmaking games, which ultimately then have no leveling curve or don't have a maintenance of history of your investment, were pretty weak. So we were both subject to our own learnings through data, through understanding of our financials, through the KPIs of our products, as well as the emergence of new platform and trying to solve for our own opportunities. So it was a bit of a defensive move, it's a bit of an offensive move, it's a bit of a reaction to our ability to monetize our product.
Yeah, and those were days that have been described as the Wild West of Facebook, the Wild West of gaming. Puppy World really took off. You guys had 1 million downloads in the first month. And yet, not all companies from the time were successful, even in an era that's been described as the gold rush. What would you say was some of the biggest challenges that people faced, even though it was considered a gold rush era?
Um, I think the biggest challenge for everybody, including ourselves, it was re-engagement mechanics, particularly on mobile, and market penetration and scale. Very few companies had really sizable budgets, and so it was hard to really accelerate growth. So retention was critical, and games like ourselves, where you were kind of trying to match people and create kind of asynchronous gameplay or synchronous gameplay, it was very hard to get people to show up at the same time or to maintain a relationship between players. We didn't really crack that truthfully until we delivered on Draw Something itself, which was obviously just a quarter later after Puppy World. We try to work with carriers, we try to work with the media and the press, we try to work with editorial companies. Those times I would say were more static marketing execution around accessing users. So you would try to go to Samsung or you would try to find a publishing platform, emerging markets. You had to go find distribution.
Sure.
The consumers weren't as readily available or accessible. And virality, listen, it was just the first days of Instagram, right? So there wasn't the same proliferation, and you weren't using the same platforms. Again, we tried to use platforms such as Reddit. Twitter was more popular at that time to try to proliferate gaming, which actually was a big piece of OMG Pop Draw Something's success and discovery. It was a more conventional way of trying to drive growth by working by established platform owners and players in monopolistic environments and doing more static awareness and then relying on the viability of the game itself.
That seems like a wholly different world from where we are now. Because right now, I think consumers are so readily accessible via Facebook's very powerful targeting tools, very powerful ad tech tools. And to think that you had to do a deal with Samsung to reach their users seems like a completely different era. And so cool that you guys tried and cracked so much of it. So you guys had seen the performance and metrics from the two predecessors of Draw Something before you launched the game on mobile.
Yes.
And you guys had 1 million installs in a month from Puppy World. So what was the internal expectation about Draw Something before you guys launched it on mobile?
Well, there's a true story behind how we end up at Draw Something. And the reality of many startups like ours at that time was that we were a quarter away from running out of cash. And so Dan, our CEO, Charles Foreman was no longer at the company, the original founder, at least for a year at that point. So Dan and I ran the company. We found our time in ourselves in fairly dire moments where we first had to let go of some people, which were rehired before, as it's well known, before we ended up selling the company, so they could use some of the rewards of those years of hard work. But we had really basically a quarter left, so we had really a few cycles left of development and resources to try to pull something off. And Dan was working on what was an RPG rapper gangster Facebook game. Dan had really deep relationships in the music industry, and so we had like a lot of rappers. I won't name the names, but involved in the game, and you were basically running street dealing and all sorts of kind of core RPG like mechanics and farming. And he thought that there was a media angle and then a celebrity angle to that, and that there was going to be an opportunity, and ultimately we needed to find a way to create cash flow, so we needed to have an RPG like game. And meanwhile, we had seen some level of growth with Puppy and Cupcake. Then decided, and really solely on him, to his credit, that he would adjust the gameplay of Draw Something to be less competitive and more asynchronous, as well as he would like to say, more of an experience of tossing the ball to each other, something that you can enjoy doing with any family member, any friend. And though there's some level of competitiveness in how many tosses you have of tossing the football, you're not directly fully competing for the purpose of beating somebody as much as participating and having a fun gameplay. And he went on to directly help redesign and simplify Draw Something. The original Draw Something game had boards. It was very much more competitive um, and required leveling. Where when he redesigned it, it was really about a much more simplistic, fun design and guessing. And one of the brilliant things that we did there was obviously showcasing the process of people drawing as well as guessing. And it created a much more immersive experience, interactive experience, even though it wasn't real time. It felt very real time. It was within, and it created an environment of going back and forth. And the asynchronous aspect of it allowed for people to have engagement even if they came back 5 hours later or 7 hours later because it was their turn. And the gameplay would stay there, and so they would re-experience the guessing or the drawing at that moment. And so it was both it felt interactive, it felt live, it was fun, and so it was very entertaining, and it was much stickier and much more viral because you wanted to invite people to do this because it was actually fun to do with people that you knew. And so that was really those were defining moments, but the reality is we were a quarter away from running out of cash, and we were on our last two products. And we had made a small amount of layoffs right before that, and Dan and I were doing the best that we could to salvage, our last opportunity in the company. And to his credit, again, Dan Porter, he went about adjusting the gameplay design and mechanics to Draw Something for the mobile experience in a way that ultimately made it a monster hit.
Wow. Yeah, that is quite a fairy tale story. And although by no means do I want to romanticize being a quarter away from running out of cash,
I'm sure that would not have been a fun place to be in, but to you guys' credit, you guys built something amazing and lasting. So you guys hit 30,000 installs on the first day, at least according to my research, and you guys had done 1 million installs on Puppy World. So did you guys think this would go past Puppy World? This would be just about as big? This would be way bigger? What was the internal expectation at the time?
It was a Hail Mary. I don't think we had defined expectation other than the fact that we needed something to work. So it's different than when you're in multiple cycles of development and you've got defined KPIs and you're running financially viable P&L, or you've got a lot of room in your forecast. The game was going to go live. I mean, it was what it was. So ultimately, we were all taken aback by the level of success. Nobody predicts that kind of level of success. I'm thinking about Fortnite right now or League of Legends. Nobody predicted those successes. When somebody has a monster hit movie or a monster hit, as a single, you have something special, but you don't really understand exactly the market conditions or what make it be a $1 billion franchise or a $100 million or 50 million installs in 50 days. So I think that obviously it was obvious out of the gate that there was something special about it. And I think that was one thing that was true between Dan and I. Is Dan really worked on the creative game aspect of our company, and I worked on the business aspect of our company. And so we were always very diligent in how we went about trying to achieve that and coordinate that. And so for 2 years prior to that, we were maximizing ad revenues. We were evaluating new revenue channels. We were doing tracking and KPIs. We were doing data. And so there was fundamentals that we had been doing for years against these types of products that when the game finally took off. And we had relationships. We've been really pushing with platforms like Facebook, with carriers, with handset makers. We were involved in media already. We had some buzz. So there was a lot of foundational work that, though they didn't yield the same return historically, ended up completely amplifying, the value and the experience of the product and its success itself. And without that, I think without the foundations of all those years of hard work and fundamentals, when the product became a monster hit, we wouldn't have been ready. The product never went down. I mean, we ended up with 50 million installs in 50 days, and the velocity. I mean, we were dealing with billions and billions of gameplays a month, 500 million impressions a day at our peak, over 20 million DAUs. It was unheard of, unseen. And we're dealing with media-rich content. We're dealing with visuals. These were early days in AWS. And to Jason Perlman's credit, or CTO at that time, and EJ, really brilliant engineers, we never went down once. And that's an important lesson that was real at that time, was if we hadn't, really diligently ran a business both on the financial, technical, and product side for many years before that, we would never have been ready for the onslaught that came from having that type of product.
Yeah, and I think that's so much to you guys' credit. that you guys focused on the process even when you guys weren't going crazy viral, even when business wasn't booming, you guys completely focused on the process. So when things started to work out, you guys could magnify and amplify that growth tremendously. So the days go by after launch. Was there a point when you guys said, oh my God, this could be huge? Maybe we aren't not only not going to run out of money, this could completely turn the company's fortunes around. Was there a specific point? Was there a specific data point that you guys saw that suggested this could be something very different?
I mean, a couple of weeks. That's all it took. The velocity was such, the gameplay, the retention rate, first day, 7-day, 2 weeks, it was drastically different from our other products. And from what we could gather in the market, talking to a few people and competitors, that the metrics, KPIs of gameplay or retention, the virality in the App Store itself, the ratings, it was clear that there was something very unique and special about what was happening at that moment. One of the most unique situations we found ourselves in is that this were the early days of Facebook Connect. And so a lot of users were not using Facebook Connect. And we weren't requiring you to have an official profile to play the game, but we didn't need you to register to have an account so that you can match with people. And so there was a tremendous amount of users who weren't using Facebook Connect, but wanted to be discovered and wanted to share their gamer ID to be matched and to have people find them on the platform the same way you would today with a video messaging app or a network communication app, right?
Yeah.
What people would do is that they would take their gamer tags and take a few screenshots of the game and proliferate that on their social networks, on Twitter, on their blogs, on their forums. And what happened is that the celebrities who somehow ended up in the games or hearing about the games, they did that themselves. And that was a tremendous conduit on a virality standpoint. So what was originally a friction point and what was really an effort in terms of process for onboarding became a huge driver of discovery and virality. Because people had to get their gamer tags. People that needed your gamer tag, the same way you do with a lot of gaming platforms today. The same way you shared your Skype account with me now, right? You needed to be able to share your ID, your gamer ID. And so people went all over the place. And once celebrities started doing that and inviting their fans to play with them, because at the end of the day, it was still an indirect touch point. The celebrity had no risk. It wasn't personal. It wasn't intrusive. The original ID owner could cancel any gameplay at any moment. There was no chat in the gameplay, so nobody could really be trolling each other. There was no negativity on the platform. And so that was a tremendous conduit. Once kind of accelerated at that rate, that started proliferating on all media platforms, Twitter and Reddits of the world and people's forums and blogs. And the imaging, where the imaging was important. The imaging was fun, it was accessible, and it was a product that people knew and resonated. And it was also one of the first games really to play with other people in a way that was mass market accessible. And so we had kids playing with their parents abroad, Army veterans. We had grandmothers playing with their daughters and the grandkids. We had couples playing. We had people playing at work. There was no boundaries to the ability for people to, of different demographics and different age groups on a global scale, to be able to engage and find fun experiences within the product. The other part that was really unique to the product that's really important to how we became so successful is that we controlled the keywords. They had built a tremendous database, again, going back to our engineers, and we were able to learn what words and what keywords were most popular and what people were having the most fun drawing and finishing or guessing. Right? So there was an algorithm that started taking place, which was, again, early in the days of, I would say, kind of AI or machine learning. And yes, we did bi-monthly iterations or bi-weekly iterations for infrastructure purposes, for bugs, So there was also kind of a very active awareness that we had something very special, and we pretty much dropped everything else. I mean, we were just all in on Draw Something, and we knew at that moment in time that was going to be the one, that was the only thing that we should be doing. We stopped building the RPG. We stopped, I would say, building or supporting or releasing on any other platform. And once you get that kind of velocities where we're starting to get 1 million installs, per day, we went from having 10 million ad impressions and making basically what was a $10 million P&L for about 2 years to having 500 million ad impressions per day. You put that in context of 30 days, that's a tremendous amount of ad volume. We also had done something that was unique at that time. We had advertising, in-app purchases, and a premium product. And so we had a trifecta in the market where originally, actually, believe it or not, advertising wasn't the original driver of revenues, in-app and premium was. And the reason was that people didn't want ads, and that in-app was still kind of like you could buy keywords. And we bundled these keywords for you to have more packs, and then we created categories of keywords that were really about themes and interests. And yes, our first day retention was well past 70%. Our 30 days were, I think over 40 to 50. I think at its peak was around 50, but somewhere over 40%. I mean, numbers that have been unheard of. And so velocity, driving velocity in a discovery-based multiplayer experience is very, very powerful. Plus all the adjustments we were making to how people could play the game, how they paid for content, how they could select types of content, who they could play with, and the fact that people could come back and play and have a history of gameplay. And that was also something that was new to our offering, as well as I would say in a multiplayer asynchronous environment that nobody had done, which was you can come back and still have your history of all the other gameplays and the other players you've played with, and you can select who you want to play with again, who you can call out to have a match with or not. And so you could have both people you knew and people you didn't know and establish a gaming rapport as well as a personal rapport with both of those different user spectrums, if you will, versus just this is only a network game of my social network. No, this became let me invite people that I know first because it's fun to play with my friends to, well, I want to play more than once or twice a day when my friends are available. And now there's access to millions and millions of people who are also playing the game that I can establish a gaming rapport with and build us dozens of games that I can play on a daily basis. So you went from having 3 or 4 games to suddenly have 25 gameplay matches that you could access on any given moment of the day. So you always have content, always have engagement, always have gameplay. And so all these things really, again, to the team's credit and our ability to kind of meet the market at that moment and the expectations and the opportunity came together.
Wow. Yeah. And I think that seems deceptively simple from the outside, but what you just said outlines exactly how many moving parts there were. And to you guys' credit, you guys pulled it off with a very small team, doing really fast iteration. Even while you guys were on the upswing and growing, you guys iterated and changed tremendously. Given that you guys were growing that fast, were you guys able to build out or optimize features that would improve the virality, that would perhaps reduce friction, that would perhaps improve the user experience so that they would share much more? Were there things you were able to do in that short period of time that would improve the virality in that manner?
Yeah, interestingly, as time went on, we were able to use network logins to amplify logging in and inviting people faster. So, for example, we improved the flow of invitations of your own network to avoid the frictions of having to share it with other people on social networks. But we made a big pivot internally, and by that point of 3 years of operating the company, Dan and I, or 2.5 years, we had some good foundations around data, at least for that time, around engineering, resource reallocation, around understanding our revenues. So we had a foundation there that once we started seeing things move, we were able to learn fairly quickly and adjust to where we should apply resources and build off of. So as soon as we saw a win, we were able to double down. And one of the things that I mentioned previously is we fundamentally stuck to how do we make this more fun? How do we make this more sticky? Not necessarily thinking about UX UI as much as going back to keywords and bundles of words and what would people want to spend more time doing, or what was it that people were doing that would be more fun to do more of. So then had to maintain a very strong focus on gameplay and usability experience around the fundamental thesis, which was this should be a lot of fun and entertaining and asynchronous in terms of a kind of tossing the football where it's competitive, but ultimately it's just about a fun experience in groups. So we went about improving the algorithms around keywords. We also were out there selling at that point, within the first 45 days, sponsorships. And we were talking about $400,000 share of voice per day type of sponsorships. They were humongous. Actually, at that time, several months later, after we sold to Zynga, we structured, I believe, was nearly a $1.2 million deal, which was, I'm pretty sure at that time, the largest mobile advertising deal done with a brand to run an entire, there was both programmatic advertising, there was sponsorship keywords, there was a cross-promotional effect to it. For a large movie that was released. So we were able to really start understanding user behavior and experiences around the product and focusing on harnessing that both for driving revenues as well as improving algorithms of keywords, which then are interest-based, which people will spend more time creating or working, or drawing around, whether it was sports or movies. And so we actually, in a really short time frame, we were able to understand the key essential drivers of the use case and amplify usability around those while solving the engineering backend.
Yeah, that's amazing, especially given that you said you guys were 1 quarter away from running out of money. It's amazing that you guys created not just a viral hit, but also a hit that was financially sustainable. Not only that, you guys, in such a short time, understood what the drivers of this growth were and doubled down on the drivers. You guys were at 1 million downloads in 10 days, 50 million in 50 days, and within 6 to 8 weeks, you guys were acquired. So I think that's something that I find astonishing, especially given that I've been through an acquisition process myself, but our acquisition process took months. So to the extent that you're able to share, how does an acquisition process happen in 5 to 6 weeks?
Yeah, so we launched the game in February, and GDC is obviously mid-March, the Game Developer Conference in San Francisco. And so within that first 30 days, there was a tremendous amount of velocity and awareness in the market. A couple of variables, again, that happen here that are out of our control, and some of them are in our control. One is we had already hired a banker, truthfully, to actually look at selling the asset because our VCs and ourselves were not sure we're going to survive, and so we were trying to recoup capital and do right by our investors and see if we could find a home. The banker's on board, and we now release in February, draw something, and immediately it skyrockets. It became apparent in particular to companies like Zynga, who are very data marketing driven organization, that there was somebody out there sucking the air out of the market, in particular to games that they own on the casual gaming side of mobile. And so they did their diligence and realized it was our game in particular. So you only had so many users at any given moment in time in the market condition. So 6 years ago, obviously a lot fewer gamers, fewer smartphone devices, fewer games out there, and a lot more games that were kind of farming game versus casual. But Zynga was very aware that we were dipping into and cannibalizing their MAU and DAUs on mobile. And so actually Pincus reached out to us and his M&A team and got on his jet with his team and showed up in our New York offices. Truthfully, the meeting did not go very well. They took a fairly abrasive, aggressive approach to why we needed to sell to them and try to override the current stage of our business and the value of our business and muscle us into a deal with them. To Dan's credit, our CEO, Dan Porter, he did not take into that, was not impressed or intimidated, and decided that he had no interest. And Pincus and his team got back on their plane and flew back to San Francisco. Several weeks later, probably 2 weeks later, GDC was taking place. And we were the talk of the town at that point. A month later, we'd seen we were at the top of the App Store. We were surging, and the algorithms in the App Store matter a great deal to your K factor, to your retention factor, and to the rate of growth factor. So the number of installs per day, the rate at which your installs are growing, the total number of installs, the retention, the ratings, all those feed into the algorithms of the App Store. And we were number one for an extensive period of time in the App Store. I mean, I can't remember how many weeks in a row, but we were already up there climbing really quickly. So everybody knew what was happening, that we had a hit. Dan rejects the approach from Zynga, and we decided that we're going to go to GDC and see what bears, see what happens. Maybe we raise capital, maybe we have other M&A talks. So myself and Dan Porter go to GDC. People are talking about it. There's been quite a bit of press release, and our banker is now in a different process of establishing relationships to evaluate upside strategic opportunities. And myself, as well as other people, I mean, obviously I have a very strong network because I've had sold and worked at numerous gaming companies. So I get in touch with Disney, I get in touch with EA. In the meantime, Dan is working on more strategic funding, $50 million round opportunities. So we really looked at a broad scope of opportunities in 5 days while we were at GDC in San Francisco. And in those 5 days, we went from looking at $50 million rounds to being in many conversations with GREE, Zynga, EA, and Disney, who all went into a bidding process around acquiring the company, which started somewhere around $120 million and then ultimately ended up at $210 million over a period of really 5 days. So it was a very amazing acceleration process where on one side we're talking about doing $50 million round. On the other side, we're talking about a company that we thought we were going to sell for scraps for $10, $15 million a month before, to now having conversations at $120 million and ultimately agreeing to a deal with Zynga at $210 million, which is obviously public information. And that in a period of 5 days, a month after having released the game. We did close the deal, and looking back, in April, which means we actually went from an M&A discussion process in the second week of March to closing in April and announcing the deal within 30 or 40 days, I think, of the agreed number within 30 days. And that was obviously also unheard of. And it's important to understand around that, by that point, we were 30 days later, we were already 20 plus million installs, right? So 50 million in 50 days, right? So we were already tens of millions of installs and active engaged users with really high retention rates, spending tremendous amount of time in the game. And those users came from Zynga for a great part. So we really capitalized our user base. We're fully aware of that. It was their first quarter as a public company, and Q2 was going to be very important. Mobile was a very important part of their strategy to move away from Facebook. And so they were in a bit of a pickle, if you will, in terms of the market perception of what was happening to them, their forecast and handling the public analysts, being a brand new public company, and suddenly having their numbers taken from under them. Disney and EA were great suitors for us, but they were not as aggressive because they weren't social companies yet, and they just didn't have the DNA to be that aggressive in understanding the metrics and the market conditions, because they weren't as sophisticated when it came to data and marketing. So even though they were very interested in the deal and they hoped that there was an opportunity for franchising and expansion beyond the product, they weren't able to really as aggressively bid into the process to the same extent that Zynga wanted to and needed to. And so Zynga, ultimately outbid everybody in a cash deal, mostly, that our shareholders as well as ourselves were really excited about. Culturally, we didn't think necessarily Zynga was the best fit for us. Obviously, the first experience with them and Pincus into our offices were not that great. But in looking after our shareholders and our employees and in how we were operationally going to work with them, we agreed to that deal. In hindsight, it would have been better in terms of brand management and execution moving forward of the IP and the culture to have gone to an EA or to a Disney, possibly. I mean, it's always easy to look back. Is it possible that we could have sold for more if we had a better understanding of how impactful we were to all these companies and the scale of our product of the P&L moving forward, possibly. But I think everybody is very pleased, both Zynga tactically and what it meant to them as a public company. At that time, the stock was at $13. Ultimately, it finished the year at $2.50. So it's important to put that into the context of when they acquired us for $210 million, the stock at Zynga went up $800 million that week. So the market's reaction was very positive. They then raised forecast in Q2 because they added another 20 million MEUs or 25 million MEUs. So the deal paid for itself, and ultimately we had strong cash flows and a great product that was complementary to their other mobile games. But that was a little bit of the story. And Dan and I frantically and in a very positive way and unique time and scenario worked to managing both publishers and fundraisers and our shareholders in 5 days, and then our employees, and then in a very short time frame, an entire there was at least 15 people involved at Zynga in diligence process of our company, both in the metrics and financials and resources during that 30-day period. Many of them had moved into our offices in New York from San Francisco, about 4 or 5 of them, were there weekly, while a dozen resources out of the San Francisco offices for Zynga were a part of the process as well. So it was a very intensive 30 days while we needed to continue improving and growing our product and growing our financials and working towards integration, technology-wise, culturally, and forecasting. It's fair and it's true to say that from that moment on, particularly from Q2 on, the game leveled up and kind of plateaued. Through Q3 and Q4, the game on following 6 months decreased at different levels of velocity downwards. It's important to understand as it relates to velocity. The velocity drives you up also drives you down, right? If you're dealing with an asynchronous game where people's interest is playing with other people that they enjoy playing it with or that they care about, when people start pulling back from the games, that means you have less gameplays. And thus you have fewer reasons to go back to a game. And our biggest challenge from this day on was how do we make this less of an obligation and how do we maintain this fun? The biggest challenge with the franchise like Draw Something and the gameplay of Draw Something is over time, when you go from 30 games to ultimately 5 games, is how do you maintain the fun component of it? How do you maintain the interest? And how do you maintain this as a chore? Right? Because when you're obligated to continue the exchange with someone because you know them and then you feel bad about stopping and you're repeating the same mechanics, it becomes a chore. And so there's a life cycle to any product of what makes the product fun versus a sense of obligations towards the purpose of the product. And we struggled probably 6 to 8 months into the life cycle of the product in maintaining or re-engaging the fun factor versus the chore component of the gameplay. And that is something that I think ultimately was a challenge for the franchise about something holistically, which was once you started losing velocity, then there's a reverse K factor that goes into acceleration of decreased engagement. The fewer people participate, the less fun the game is, the less reasons you have to come. And so the K factor goes both ways. One can be a positive K factor, one can be a negative K factor in terms of downward velocity pressure of people pulling out of the game and thus increasing the number of people churning. What happened is we went through several brackets from 25 plus million to 15 million to 10 million to 5 to 6 million and to more 1 to 3 million. But those were a period of 24 months. And even within the second year, we still had multiple millions of active monthly users, which again, at that time was still a meaningful amount of gamers, but it certainly wasn't the tremendous amount of MEUs and DAUs that we had in the first 6 months. But there was a consistency there and an ongoing financial value there in the tens of millions of dollars, even in the second year, even though it was no longer on a growing scale from the first year. So there were plateaus of lowering of that user base that were over an significantly longer period of time than people understand that to be. But what happens is the PR press in the world will ride you up and it will ride you down. The moment that we were no longer number one, and thus if you think about the app stores and how the app stores work, right, which is engagement, retention, reviews, velocities of installs, velocities of total aggregate app installs, well, you also have the reverse effect there, which is if you surge really high and you can't maintain that surge, then you will naturally drop. It doesn't mean you don't still see a lot of installs. It just means you can no longer sustain the ranking algorithms, right? So, and at that time, they were very much driven on velocity more than anything else. And so as our velocity decreased, then we dropped in the App Store over a period of 6 months. And as you're no longer in the top 25 or top 50, then you're no longer a discoverable app, and your installs naturally just, attrition. We'd also, quite frankly, had seen hundreds of millions of installs, and there's only just so much of a market size for any product as well as at that time. So all these variables came into play, plus the PR, it was a bad acquisition. The Zynga stocks was at 250. There was also kind of a perfect storm around social and gaming in 2013 that was fairly negative across the board, not just for MG Pop, even though we bared a lot of that grunt. But Zynga was a down stock. The market was slowing down. There wasn't a lot of innovation going on. So people were down on the sector a lot. And that has a shielding effect on gameplay, on usage, on saturation of usage, on the mind frame of gamers. But it's really important to realize that we actually sustained millions of MEUs even in the second year, which it was never talked about.
Yeah. And you're right. And I think most of the press focuses on Draw Something having been a huge viral sensation. But I think what isn't noticed as often is that it was a financially successful product. It had great product engagement metrics. From what I've read, the day 7 retention was 50 to 60%, if not higher. So it sounds like it was a very sustainable product. It was a financially healthy product, except of course it was also subject to the same cycle that the upswing was subject to.
I mean, if you think about Pokemon Go today, listen, Pokemon Go has a tremendous 12-month run. Is anybody talking about Pokemon Go today? Nobody's talking about Pokemon Go anymore. Is it not a good game? It's still a great game. It's still a revolutionary game. It's still a market changer, and it's still generating insane amounts of cash. Now, is it generating $1 billion like it was last year? Probably not. But does that not make it a success? Absolutely not. So I think, there's the perception of what the press feeds on. And, again, at that time, we went from being a $200 million exit and being the biggest game in history at that moment to 6 months later, 12 months later, Zynga stock being negative, the public markets being negative, the industry being really in the lull 12 months later in the social farming, gaming space, mobile space hadn't really taken off to another stage. And so that feeds into the condition of perception that it was just a one-hit wonder, it was just a fade in time, it was just a momentary opportunity. But the fact is the numbers speak very differently of the fact that, we had over 70% first-year retention. It was extremely successful financially. We had millions and millions of MAUs for well over 12 months to 24-month cycle period of time until this Draw Something too. In the early stages of the deal and the return on capital that Zynga got from the acquisition, it was significant success.
Yeah. And I've played Draw Something and I played Pictionary offline, and I find both of those very enjoyable. I still play Words with Friends, which has been around for 8+ years. All of that drives home your point that what the press highlights isn't necessarily what is financially sustainable. You talked about how the cycles of attrition happen. You talked about the turbulent times in the industry itself and also for Zynga, which were perhaps driven in part by the transition overall to mobile, in part by the overall adoption of mobile mechanics, gaming mechanics across the board by other companies. And one of the ways all of that played out was that eventually the OMG Pop office was closed down less than a year after the exit happened. How did that feel for the team? What was the mood and sentiment like for the team when that happened? Well,
I think it wasn't an OMG Pop circumstance. It was a cycle within Zynga where Zynga's stock had dropped down to 250. So I remember 275. I remember 8 months in, having conversation myself with their management team around how they were going to restructure some of the earnouts that was, remaining for some people. I would say that everybody at a company is in a different emotional and financial situation through any deals as well as their own jobs. And so obviously some of us were slightly more lucky and successful in the transition and deal of Draw Something than others, simply because of where we were as executives or founders or on the cap table. So what I would say is some people were very happy to have their jobs at Zynga. Some people were ready to move on. Some people were sad because of what we'd achieved to see the state of the business or the OMG Pop offices themselves, because they had an emotional attachment to the company and with Dan. Dan did stay a year later than I did. So he stayed through 2013. I only stayed through the end of 2012. And so he was able to do a good job at protecting the team and working through some of these transition plans. And by the end of 2013, yes, they moved on from those offices. But it wasn't just, it was also the Boston office. It was also the office, I believe, in DC or Philadelphia. And there were some consolidations. They pulled back from other markets like China as well at that time. So again, it was more of a circumstance of the lull in the mobile casual as well as Facebook timeline of what made Zynga successful versus where the market is moving forward and the gap in between. Facebook was Zynga's primary revenue driver and platform. 2012, 2013, that became kind of, people moved away from that. And between 2012 and 2013, there was a transition into mobile and new developers into a new cycle of gaming, which really didn't take off until 2014, 2015. And so Zynga bear the quick run of that. And in that, they restructured a lot of offices and try to manage their financials as a public company. So it was a symptom of a greater issue in the market condition and within Zynga. I'm always opportunistically excited about participating in building great companies. I think at that time, OMG Pop was my 5th startup. And so I was ready and looking forward to building another business and creating another great product and creating more shareholder value somewhere else.
Yeah. And like you said, it was very much an industry-wide thing that resulted in, the OMG Pop office closing down. And you could even point out that Zynga went through a very similar ascension and decline. I wouldn't decline in much the same way that OMG Pop did. And I think entire transition, it broke many hearts, including mine, when I saw that happen, because I was such a huge fan of Draw Something at the time. But
and by the way, if you look at the second cycle, which was the Kabam machine film cycle in the Valley, which were mobile and RPG, they also went through that cycle, right? 2014, huge move to mobile, huge move to kind of more RPG-like products, higher ARPU, arbitraging, which really was kind of new to mobile. And these guys really pushed the limits of the market and grew tremendously to creating billion-dollar P&Ls with primarily single franchises. And there again, you have a life cycle. But by the time it was 2017, they were running out of steam, running out of market size, running out of users, and ultimately churn takes place and franchises have a cycle and products have cycles, and did deals or no longer in filings of IPOs or having clear M&A path. So I think at the end of the day, there's no right or wrong, but Zynga has its cycle when it went from being the primary provider of gaming for Facebook to trying to pivot into mobile and struggling to do that. You have product cycles, you have industry cycles, platform cycles, but people just, again, forget that that's how a lot of businesses function. It doesn't make them bad businesses or ephemeral businesses. It just means that you're not always going to be at the top of your game, and market conditions create cyclical cycles and business growth. And tremendous companies like Kabam or even Machine Zone, who created billion-dollar P&Ls, were never able to create Supercell-like organizations and multiples of IPs who generated sufficient of cash flow and ongoing growth. Really, if you look at the companies out there, Supercell is ultimately the true greatest success of that era, by far. Fortnite is a new generation now, so I don't want to count them in that cycle, but in that 2002, 2003 to 2006, 2007 timeframe, Supercell is the ultimate success to that industry. I mean, Supercell was the Activision of the mobile world. It's quite an amazing achievement. It's a lot harder than it seems to just build more than one successful product. And even when you do that, it doesn't make you not a good company. It just shows how difficult it is to build franchises across multiple IPs and to build multiple billions of dollars of P&L for long periods of time.
Yeah, and as you said, it's a natural life cycle. There's a natural business cycle. There's a natural life cycle where products ascend, where trends emerge and trends die down, which only illustrates, like you said, how hard it is to build something truly sustainable. We are approaching the end of our time together, but I would definitely want to talk about some of the things you did after OMG Pop. OMG Pop, like you said, was your 5th startup. You'd been in gaming for a while. You continued to work on some amazing apps afterwards. Can you tell us about what you did after OMG Pop?
Yeah, after 10 years, 12 years in the gaming industry and having a huge hit, obviously, I decided I wanted to explore other areas of verticals of opportunities. And so I ended up taking on the role of COO and president of a company that was a video group chat platform called PalTalk. It was a legacy product that had significant numbers of daily concurrents, so around 400,000, who were participating in using video group chat from a server-to-server perspective. And so the technology was unique, and I was working with its founder to pivot that platform, which was PC-based, into mobile, and we were generating extensive amounts of cash flows. So along the process of finding acquirers for the platform and technology, Josh Ellman and David Z at Greylock, well-established product guys as well as investors who I'd known for a while, mentioned that there was this little app that was growing significantly in the Google Play Store, and it could be interesting to me. They had briefly met the founder, who was out of Eastern Europe and Armenia, And he was looking to build a global business with very little to start with, except for a fast-growing product. And so I went to Armenia, and I met with Hovannes, the founder of Pixar. He had a vision to enable for 1 billion people to use creative tools for self-expression and creativity on mobile first. And so for him, the idea was creating and building a community that would enable 1 billion people to self-expression and creativity. And I was really interested in that, and the numbers looked really unique at that time, organically, with a small team of about 15 developers, and him as a sole founder in Armenia that was bootstrapped. There was no investors. It was, within the first year of their launch. And so there was very complementary skills and expertise in my background, having raised capitals and built different departments of organizations, scaling the business, to his product vision, his experience, and his goals. So after 3 to 4 months of courting each other and me going back and forth between San Francisco and New York and Armenia, I agreed to join as the first hire, if you will, non-founder hire, non-Armenian individual at the company to help him build the organization.
And today, you are the CEO at Heartbeat Radio. This is your new venture. You guys are a wearable hardware and software company that could very well change the way we communicate and capture moments safely using hands-free devices. Your first product is coming out this summer, and I'm excited for that.
I know we are coming up against the end of our time together, Wilson. And I think this has been a tremendous conversation that I'm very, very excited to share with the world very soon. This would be a good time for us to start to wrap up. Can you tell our listeners how they can find out more about you?
I do, post a lot on LinkedIn, so you can, find me on LinkedIn, Wilson Kriegel. I am on Twitter. My Twitter account is WD Kriegel. And those are usually the most prevalent places you can find me. But a lot of people follow me on LinkedIn because I post a tremendous amount of information and news update on a daily basis, everything that's going on in various verticals and industries. And I do speak at, probably 5 to 10 panels a year, which I enjoy giving back into the community and sharing some of the insights and the learnings that I've had the opportunity to have.
Absolutely. Yeah, I will link to all of this in the show notes when we post. This has been amazing, Wilson. Thank you so much for taking the time to be on How Things Grow. I hope to see you around soon.
Thanks for having me.
For more tips, pointers, and strategies from the leading edge of mobile user acquisition, subscribe to our YouTube channel right here, or check out our blog, rocketship.hq.com/blog.